Hey, I'm with Jamie Montgomery. He's the CEO of Montgomery and Company, known over the last year for selling Club Penguin to Disney, and you're also behind the MySpace deal selling to News Corp, right, Jamie?
That's correct, Bambi. Nice to see you.
Nice to see you. Well, it's summer of 2008, and the M&A market, IPO market, is not looking good, it sounds.
Well, we've had a healthy first half of the year in M&A. We think it's a good market. The expectations of the sellers are often a little bit higher than what the buyers are, but we're still getting some deals done. The IPO market is pretty much on hold for the foreseeable future. So there's a lot of good companies that are just growing into profitability. And plenty of capital in the private markets now, but public markets are pretty constrained.
Well, what about in 2009? I mean, there are lots of companies with getting $500 million valuations in the private market, like Slide, or 250 million market valuations like Federated Media. I think Ning also had a $500 million market cap valuation, in LinkedIn, presumably about $1 billion. Will they have an opportunity to go public in 2009?
Oh, I don't think so. I think a bit early for them. Those are some pretty healthy valuations, and I think hard to see those again in this current environment, but we like to be optimistic long term, but I think it's going to take longer. I think you need to see double digits profitability and pretty healthy growth in order to be a public company. I think you want to see a market value based on forward comparables north of $500 million. You probably want to see about $20 million type profit numbers on the current run rate, and those companies are good companies, a lot of traffic, but they don't have that sort of profitability yet.
Right, so what do you do if you're that type of company and you can't tap into the public markets?
Well, I think you wait. The market's a filter, and right now the filter is very, very fine, and it will open up over time. I'd say a good 18 months more, but so I think you wait. If you need liquidity, you can do a late-stage financing. Lots of private capital available, and more of those deals, and we're doing them. We're not only putting money into the company, but also providing some liquidity for the early investors or some of the early management teams.
So you're doing a lot of that?
Yeah, I think it's different now. I mean, an IPO typically would be about 80% new money, 20% would be buying out old shares, and that changes over time too. So say we do a $50 million round, you might buy 2/3 preferred, 1/3 common, and so you're providing so you can provide some liquidity and take some of the pressure off and allow people to continue to grow their business for the next couple of years.
What about the M&A environment? How is that looking for? I mean, there's still so many companies that seem to get...
There's thousands of companies that need to be sold. The overall market's down about 30% from last year. There's about 550 venture-backed M&A transactions last year in the media and tech space, and that's probably a good normal number. It's down by about 30% from that. We have about 5 to 7% market share, so we're one of the leaders in that market, and we're slightly up on last year, but the overall market's down about 30%.
What are the buyers looking for? Are they done making deals?
No, we're seeing fewer buyers show up at the table. You might have 2 or 3 solid buyers rather than 7 or 8, and so deals are taking a little longer to get done. We're also seeing a lot of financial buyers. In some cases, the financial buyers are willing to pay more than the strategic. In the past, that was driven by...
Who are some of the financial buyers?
Well, you might have a private company backed by a Francisco or TPG or General Atlantic, where they have plenty of capital, and they have a private play in a media space, and they will use that, continue to fund that asset to make acquisitions.
Back to the... actually, still sticking with the M&A environment, these media companies, are they looking for bigger deals or smaller deals, a bunch of small deals? What are they?
It varies. And we sit down with all the major media companies regularly and talk about their landscape and what they're interested in, and it varies. I think at some point in time, it has to be big enough to move the needle. I think if you do a deal that's more than $50 million in revenues, a couple $100 million in revenues, oftentimes you're getting a very knowledgeable management team that will allow them to successfully implement and grow the business. So oftentimes they need that as a platform. And then the smaller ones could be tuck-in acquisitions, or could be certain technologies allow them to optimize certain parts of the business. So it cuts across the board, but I think it's just as much work to buy a small company as a larger company, and the larger ones usually have a little less risk involved in terms of integration because of the stability of the management team and their ability to foresee revenue.
And then, so the IPO market, I mean, what do you think is going to happen with Sarbanes-Oxley? And do you think, somebody wanted me to ask you this, if there'd be sort of a tiered type of Sarbanes-Oxley so you could have more companies going public?
Yeah, I think there may be a waiver under a certain size, or there may be some provisions of it that become optional at the selection of the board. I mean, we have an election coming up. I think both of them will go to the center in terms of regulation. I think things have to get really bad before they change. I think some of the regulations in Sarbanes-Oxley will be on the table. But, on the flip side, there may be worse news in terms of treatment of capital gains. I think Glass-Steagall will also be back on the table. So the new administration will face a lot of issues that they'll have to deal with.
Who do you think will be more favorable to the capital markets?
I think it's very unpredictable. If you take Obama at his word in terms of his tax policy and economic policy, it'd be a complete disaster. But I think he's a smart guy, and he'll moderate those policies. There's a certain reality of being president that gives you a different perspective than you might have with a junior senator from Illinois. So I think he's got a lot of potential. I think McCain has shown a much more attractive track record towards tax policy and economic policy and capital markets policies. So.
Do you think that the European markets are doing a better job at getting companies to go public?
Yeah, London's done a great job. It's really become a financial capital. A lot of that's driven by the attractiveness of living in the UK from a tax point of view. You're not taxed on global income, whereas California is the absolute opposite. You live in California and you're a foreigner. California typically won't even recognize the tax treaty, so not only do you pay the foreign tax, you also pay a state tax on top of it. So there's a penalty. There they have an incentive. So we really have it wrong there, and it's there's been a lot of financial innovation, a lot of wealth come to the UK, a lot of investment, and they've just been much more forward-looking in their tax policies than we've been. And in terms of capital markets, the London market's been obviously a lot easier to register in. I don't think AIM is a very serious market, but the main board, LSE, has done a good job. They have a per capita of about 3 times the IPO that we have in the U.S., and a lot of that's driven by a more favorable regulatory environment.
And I guess last question, but do you think that in the U.S., if there's some restructuring done, do you think companies will be able to go public with $1 million in revenue, $5 million in revenue?
Oh no, I think there's going to be a cost of being public, and I think you want to have 10 million type profit numbers, and if you look at a multiple of that, you're probably 15 to 25 times. So minimum market cap of $150 to $250 million will allow you to do about a $40 to $75 million IPO. That should be on the small side. So I don't think you want a pure startup going public. There's just not the appetite amongst the investors for that, and it's hard for the banks to provide research support and trading support for that.
Okay. And are you investing at all in the public market?
We're not. That's not really our specialty, Bambi. We've been making a lot of private investments. We're the largest venture investor in Southern California last year. We did 2 major deals. We bought a controlling interest in Vantage Media, a search engine marketing company. We also, with Silver Lake, acquired Mobile Messenger, and we're looking at doing another deal. So we really like the alternative advertising space, and we're continuing to deploy private capital in that area.
Okay. Well, thanks very much, Jamie.
My pleasure, Bambi. Great to see you.
Great to see you.